guys, so in this video we are going to go over gold. So the first commodity I've ever talked about, to be honest. So a lot of you know I don't trade gold. I used to trade gold when I first started Forex, which is why I stopped trading gold. Just because it's very, very volatile and you really need to understand zones and price and everything about gold. So when I first started, I obviously didn't learn properly, and the people that taught me and the information that I was reading online, it just was all incorrect, and so I kept losing on gold. So then I literally haven't looked at it much. I ended up mastering, like you guys know, GBP, JPY, Euro USD, and USD CAD, and I've never really looked at gold since. But for the last couple weeks, I have been looking at gold, and it actually respects zones very well. So the biggest advice I can give you though is when you're a beginner in trading, I do not advise you to trade gold just because it's super volatile and it moves quick and the pips are ginormous. So let's talk about pips for a second. So for example, let's say we take this at 1510, and then let's say we take this at 1520. Okay, so just measuring the pips from 1510 to 1520 is 100 pips. Okay, so in currencies, this would be 10 pips, but so it's in tens for gold. So you go 1510 to 1520 is 100 pips, 1520 to 1530, 200 pips, 1530 to 1540, 400 pips. So it just goes 10. So it goes 100, 200, 300, 400, every tens. Okay, so it moves fast, guys. So you really need to be on point with gold and back testing like no other. But when you have when you are consistently profitable on currency pairs, then and you have more experience with the markets, then you go ahead and check out gold. But as a beginner, I do not recommend. So when gold falls, the US dollar is usually strong, and when there's bad economies, so for the US, if there's a bad economy, which there is right now during COVID, you can see how gold is so strong right now. So that works differently. They have a negative correlation with the US dollar and gold, and then what is a positive correlation with gold is AUD USD. Okay, so Australia's economy is driven by commodities, so that's why they are positive together. So just by looking at gold on the 8-hour, the 4-hour, whatever, it doesn't matter. What we want to do is mark up our zones. So here we can see that price rejected in this area, okay? And we're looking to see if we can have a rejection in this area. If not, we're looking to see, okay, where is it going to go? So it's pretty high right now. This is in February of last year. So let's just look at the daily to see what we have left. Okay, we have nothing here, so then we're gonna go on the weekly. Okay, so we have a high. We have a high here. This is just minor structure here. So we're going to take a horizontal ray and we're going to round that. It always has to be above the candlestick body. You don't want to mess that up. So let's round it to 16, 10, 200. Let's see if that's enough. Let's go a little bit higher, 500. There we go. So 16, 10, 500, and then we also have a zone here at 1685. let's just highlight these wicks. So this would be our zone. Let's actually go 1696. You kind of have to play around with it. Okay, so our zone is in between 1685 and 1696, which is 100 pips, and then this one's at 1610.5. Okay, so what we are going to do is if we break this 1610.5, then more than likely we are headed up to that high level right here around 1685. So let's just see what happens. So jumping down on our 4-hour time frame, it's looking like, so we had a strong rejection here. We closed below 1600 and then we ended up dropping. So now we have a strong bullish candle. So let's just watch. So we respect 1610, end up breaking below. So then on the 1 hour, this is what we get. So rejection, but we keep climbing. So we keep climbing here. So we test. So the reason why we tested here is because this structure broke. So it broke 1600, then ended up testing 1602, and then it looks like we're trying to break above 1610 again. So we respect, come back down, and then end up reversing. So the trend line is just an extra confluence. So we would just draw it like this. So basically it fails to break below the specific price in the trend line. So it ends up closing above, and then we end up moving higher, just because you can see on the 8-hour, for example, how it rejects to 1602, comes back up, and it just doesn't have enough selling momentum. So then it keeps continuing up. So realistically, I think it will go to the highs because we have no price action on the left telling us that we are going to reject. Let's just see. Yeah, so that 1610 area was where we were going to reject. The next high is 1685. So let's just see. Holy, moves fast. Okay, so it wicks at that price, comes down. Okay, so it ends up wicking at 1685. So on the lower time frames, we can get that price action and end up selling at that price, because again, we had a huge impulse to the upside and now we need a correction, and it's at that major high on the weekly time frame. Okay, so from 1696 to 1685, which realistically it went up to 1690-ish, we were looking for a rejection. So like I said, anywhere on even the 30-minute time frame, we want to see how it's rejecting. So it actually tests once, twice, then closes, tests that 1685. Here's our entry. Okay. So then it ends up respecting that structure, then dropping down. So the reason why, so we're going to get rid of this because this is non-existent now because it ended up breaking the structure. So then the reason why it dropped down here is because we have support here. And then our next level we're looking at is around here. And then here. Okay, so price broke, tested, came up, tested, broke, tested, and now we're at that support. So it might come and test 1610 again, and then if it ends up respecting the structure, then we would go further down, but let's see. Okay, So what ends up happening, comes to this, tries to reject 1610, but ends up respecting, not enough selling momentum. So then it ends up going to that high again at 1685, then goes further. So see a lot of manipulation on gold, and this is what you need to watch out for. So you need to make sure that you're taking like a sell around this position, or you're taking a buy once you see price action here. So let's just see what this looks like on 1 hour. Okay, so it comes down, wicks, tries to reverse, touches the 1610. There's just, like I said, there's not enough bearish momentum, so it ends up hitting the high again. So like I said, you have to be mindful of your entries, and you can't just take it wherever you want. So it ends up coming to the 1685, ends up trying to break below. So then on the 1 hour, this is what it looks like. So it respects, comes down, then respects this zone, comes back up, tries to break above 1696, tries to break above 1700, and then exhausts, comes down, tests that 1685, and more than likely it's going to drop now. So huge manipulation right here. Tried to fake out, try to get buyers into the market, and then completely reversed it. So it should drop from here. So that 1685 level is a really good level. So it ends up dropping. Then, so it dropped through, ended up testing 1610. So 1610.5. So 1685 and 1610 were really good levels, and all I did was look left. And then it comes back down to the support. Ends up going further. Looks like it's faking out from this. And then what ends up happening is it continues to drop. So drops, tries to go up and retest the structure at 1575, then ends up coming back down. Like, it moves fast. So then the reason why it's correcting here is because we have support here. So at approximately like 1450, 1453 area. So then we end up testing it. See, on the daily it looks nicer because it's all together, there's less noise. So it's respecting each level. So it comes back down there. So to get that, we ended up coming down here, respecting it, and then reversing. Okay, so again, gold is something that you want to look at in the lower time frames, but once it hits a higher time frame level, same thing as currency pairs realistically, but once it hits a H4 level, go down to the 15-minute or the 30-minute and to take your entry and watch price action, because that's where you're not going to get it by the 8-hour. It moves way too quickly. You gotta jump down on lower time frames to get this analysis. I'm just showing you on higher time frames right now because like 1 hour, it's just so much price action. But like I said, once it arrives to that H4 level, drop down to 15, 30, whatever lower time frame you work best with, and then enter based off that. So then let's see what happened. So we dropped down to that level, respected it, corrected, came back up to that 1560 level. So right here, wicked at it, dropped back down. So then ended up respecting this price. So 1 test, 2 tests, and then completely back up. Let's see if we go to the high. Okay, so we end up going to the high. So we end up breaking 1610, then testing, and then what ends up happening is we tried to break below, but it ended up respecting. So again, we're just adding new zones. Once it respects that I just like go on and delete this just because price is all the way up here. And then once it comes back down, then I'll see, like, we're just looking at current price action. Okay. So it failed to break here, then it broke, didn't retest, came back down to retest, and then now is heading up again. So it ends up making an M pattern, and then we have a resistance level here, and then we want to look left to see, okay, why is that happening? Okay, so it's because we have a rejection in this area. So that's why I respected. It's the same thing, guys, as currencies, realistically. Like, it does respect, and you do want to round your numbers. The M patterns work well. So we had an M pattern, 2 tests. We had a rejection down. Now we're going to correct a little bit. Tries to break below 1685, so comes down to test this zone, fakes out, and then goes back up. Then we reject this one more time. It exhausts, comes back down to that 1696 level. Tries to break below again. So now it's like consolidating because we had such a huge movement. See how it's testing all these numbers? This is a good thing. So it tries to break above this price. Coming down to test. Okay, so we didn't have enough bullish momentum. It started exhausting here, so it came down, then respected, came back down to that 1696 level again. Comes back down again. So it's just basically ranged from April to June. This is on the 8-hour time frame too, though. So again, like with the 1-hour time frame, you can see all of this happening, and with the 1-hour time frame, you can say, okay, it's exhausting here. Here's my entry, and then it ends up respecting this price. And then it goes up again. The reason why it tested here is because there was no retest here. It just completely dropped, came up and retest, exhausted. Here's your entry. Like, just off these zones, guys, it's a huge amount of pips. Like, from here to here is about, well, let's just go to here, 600. And then let's say from here to here is almost 1,000. Like, it moves quick, and you have to be like fully aware of what's happening. So like I said, look on the higher time frames, 4-hour or 8-hour. Once it arrives to that level, you can look at the lower time frames, but you can still do price action on the lower time frames. So for example, we had a resistance level here. Let's just delete this quick. So we have a resistance level here, ends up coming up to structure, and then ends up dropping. Okay, so the reason why it comes down to here is because of this. Okay, and so then it ends up respecting 1 hit, 2 hit correction. The reason why it's correcting here is because of this. Okay, so then it ends up respecting, dropping again. Then it ends up breaking this. So the reason why it goes down to this low is because of here. So there was no retest, so it ended up shooting up, no retest. That's why it came back down. So this was May, and this, oh, sorry. Okay, so this was May 14th, and this was May 21st. And then it retested, came back up, and then started consolidating a little bit, and then it ended up completely breaking. So it went to this low. The reason why it went to this low is because of here. Okay, so it's just breaking it down more. So these are the higher time frames, and then the 1 hour looks like this. So same perspective, it's just when you're trading and looking for entries, you always want to look at the lower time frames for this especially. But yeah, it works really well. Like I said, you need to be mindful of how fast it moves and you need to take your losses like right away. Hold your profits, take your losses, because you do not want to move your stop loss and you do not want to hold your losses on this, because that's it. Your account's done if you do that. But yeah, so another thing you can do for gold is figure out what times it's moving best at. So for example, take out this session indicator that I've talked about, or you can just manually go through it. So for example, you figure out what May 18th is. This is at 6. And so it's telling you, okay, well, during Asian session, it moved up. London session, it just consolidated. New York, it completely tanked. Okay, so just from this day, just in 1, 2, 3, 4, 5, 6, 7, so just in 8 hours, this moved 370 pips. Okay, so then it kept going. Then Asian session, it corrected. Then during London session, it moved up. New York session pushed it up to that correction phase, and then New York session pushed it down, as well as Asian. So these are the types of things that you can backtest as well. So again, you need experience with the markets. Be consistently profitable with currency pairs. You can start on gold if you want to. You just really, really got to backtest and really, really understand price. That's my biggest advice. Let me know if you have any questions on this video. But like I said, if you like how gold moves, then again, just take time to backtest it and really understand it.